So let's take a look at this. All right, I've had these levels drawn out for the past couple months at this point. All right, these are the major demand zones, the major supply zones as we've broken down, and this is how the S&P has been playing. Okay, this is on the weekly time frame, so you get to see on a large enough time frame what's actually happening on a bigger picture basis. Okay, after we had this downturn from July through October in 2023, the S&P was effectively up only this entire way until we hit our highs in December. Okay, so here's what we got to take a look at. We tried to break out 1, 2, 3 times, and we failed to do so. So that inevitably led to our puke here due to the tariff news. Okay, so everything is correlated to equities. Everything has to do with where the S&P is going, right? Crypto, altcoins, everything is in some way correlated to the alpha asset, which is the indices. So we get this downturn in indices, so we obviously get the rip down in altcoins. They draw down. Bitcoin actually held up incredibly strong during that downturn, but everything came down because equities came down. Okay, people became bearish. So we broke down through these levels, and as you see here, we lost this level, so then we got a big little wick down here, then wicked all the way down here into the supply zone. We tagged it beautifully. It was demand at that time. We bounced off of our demand at that time. This little wick right here hit off of our overhead now supply. Okay, so we reject here. We lost it. The next week we came down. We puked again hard, all the way down into this demand zone. Okay, the next week we had a quick pump back into our supply, drew all the way back down past this demand zone and almost tagged this demand. Fortunately, we saved it and we closed up here. Okay, then we rejected again off the overhead supply. Then we just chewed through this supply. So why am I going over this? So we got to understand where S&P's at to understand where Bitcoin and the rest of the market's at. We reclaimed this supply, it looks like. Okay, so now we could change this to demand. All right, so we closed the weekly above. Here's now our next weekly candle. We're above this demand. Okay, so the way I have this drawn out is it's likely that we see, in equities at least, a push up higher into this overhead supply, which would cause the inevitable pullback to retest this demand zone. So we broke through it, which was resistance originally. We broke through it, we come back down, we retest it, turn it into support, and then push for a breakout. This move here up to this breakout needs to lead to something like this for the cycle to continue. Okay, but that's only going to happen with SPX reclaiming this supply level. Okay, so we got to chew through this last piece of supply, okay, where we had this price action up in here, to then make another push for a breakout. We make the breakout, we're cooking. So that's where we're at on SPX. So this is what I'm watching for. I'm watching to see this supply region either get eaten through or we reject off of it, come back into this demand zone, and we have to hold this demand. We have to hold this demand on the pullback and push up higher off of that, okay? Now, granted, with the rate cuts that are eventually coming down the road, that tells me that there's more reason for me to believe that there's going to be more bullish conditions as opposed to bearish, okay? So I'm expecting something like this to play out. Now, because equities is the alpha, right? People ask me, well, why would you hold Bitcoin or altcoins or crypto instead of just holding the S&P if the S&P virtually is up only over time? If you look at, if we really shrink this down, let's do it like this. Right? Here's COVID, but effectively up only over a long enough time frame, right? It's just always going up, going up, going up. Here's the other big nuke. 2009. Okay, this was the financial, the housing market crash, right? But virtually up only outside of those events, okay? So why would somebody hold Bitcoin in altcoins over in alpha as in the S&P. So the way that I explain it to people is I'm just playing the highest levered position that I can possibly size into. Okay, so what does that mean? Equities effectively is a scam, right? Why do everybody have a 401k with their company that they invest into for their retirement, their entire careers? They're always setting money aside from their paychecks. Why does every company across the country offer something like that? And why are there so many incentives to invest into these Roth IRAs, 401ks, all these different investment vehicles? What's the incentive for you as a consumer to do that? Well, the people who have their wealth hold their money inside of the S&P, these indices that you invest in via proxy through your 401ks and Roth IRAs. These individuals benefit from that because you're going to appreciate the price of their assets over time, therefore preserving their wealth. Now, the idea is it would preserve your wealth as well, but essentially what you're doing is you're offering the perma bid on those indices. You are the perma bid on those indices that allows them to go up only over time, okay? So that's why you're basically suckered into doing this. Again, is it bad? Are you going to make money? Yes. Is it bad? No, not necessarily. But the way that I look at it is, okay, what's the absolute best way possible to compound my wealth over time if there's a faster and better way to do it, right? It's not get rich quick. It's not make money fast by taking shortcuts. It's just simply, can I use the same amount of time, the same amount of capital to get more multiples on my money? Is that possible? Yes, it's possible via crypto now, okay? So what do I mean by that? Bitcoin in crypto is now tightly correlated to the S&P, to indices, to equity markets. As equities are ripping or moving up, so is crypto and Bitcoin. So why would you hold it over indices? Because as indices draw up 15%, Bitcoin will go up 50%, right? It's just a simply higher leverage, higher rate of return. So let's take a look at the low in October 22. Let's do something here. I'll show you. This is how we do the investing, right? To the high. You got 73% move on the S&P, a little bit more, from the low in 2022 bear market, okay? So if you had bought in the Pico low and you shoved here on the S&P, you would be up 76%. That's not even double your money. Now, sounds great if you have a lot of capital, right? It does, for sure. But let's take a look at Bitcoin in that same time frame. So this is October 22. Let's actually do it like this. Here's the reason you hold them. Look at how much higher lever of a play this is. So let's do vertical line right here. That's the low. And then the low on Bitcoin was down in here. Say from here to its all-time high. And there's your answer. Bitcoin is a stable enough asset. Bitcoin is an asset that has been adopted by institutions at the highest levels with ETFs. All the largest financial corporations in the world investing in Bitcoin, offering these ETFs. It's a real currency. It's a real investment. Well, look at what happened in the same time frame. You could have invested 100 grand into the S&P and returned 176,000 at the all-time highs. So you'd be up 76,000. If you put that same $100,000, that same 100,000 in the same time frame into Bitcoin, you would be up from the low over 6x, 533%, over a 6x. So your 100,000, instead of turning your 100,000 into 176,000, you would have turned your $100,000 into $633,000. Okay. So now you understand why we play levered positions. Okay. Who's this guy saying? Get out of here. So that's the reason you hold beta. Okay. So whenever individuals ask me, so why don't you hold, typical indices or S&P instead of but I do buy I would buy individual stocks, but I don't hold any indices. Why don't I? Well, because if I understand the relationship between the S&P and Bitcoin and how they're correlated, then I can go ahead and outperform indices still size into Bitcoin effectively and make way more money than I would have just holding an index fund. Okay? The only reason in my mind as an investor that you would hold an alpha over a beta is if you cannot effectively size into the beta asset, meaning you have too much capital, too much wealth to be able to park inside of an asset where it makes sense for you to do so. Why is that? Well, if you have a shit coin, a meme coin that's a $10 million market cap, it's tiny, and you have $1 million that you're trying to size into this coin and try to buy $1 million worth, by the time you're done buying that $1 million worth of coin, you've already increased the market cap significantly on yourself, and other people are just dumping on your head. Meaning that by the time you're done clipping in that $1 million, your average cost is going to be so much higher than where you started buying at, because you're yourself influencing and increasing the price on yourself by buying more of the asset. So that would be the only reason that you would hold an alpha over a beta if you know they're correlated. Well, fortunately, with the amount of capital that I'm investing with, and I'm sure you're investing with too, Bitcoin, altcoins are plenty big enough for us to be able to size into effectively. Now, there are shit coins that are small, like Andy and Wolf, that I could not put my entire portfolio into because I simply would just move the price too much. But outside of that, outside of very small caps, everything else you can size into effectively. So why would I not hold the beta? Why would I hold the S&P if I know the S&P is going to be up only? Well, if Bitcoin's directly correlated to the S&P and the S&P's up only, then if I just buy Bitcoin whenever it's down and I know the S&P is down, I know that to the upside, as equities are topping out, up 76%, I'm going to outperform equities and do a 6x. Huge difference, multitudes of a difference. That's $1 million into 6 million as opposed to $1 million into 1.7 million. 1 million into 6 million as opposed to 1 million into 1.7 million. That's the difference between the S&P and Bitcoin off of the lows. That's why you hold the beta. Okay, so the only reason that we track the S&P and equities is because this is going to give a signal as to what's happening in the broader market. Okay, understand? So this is the correlation between the two. This is how I decide on what I'm going to invest into.